What's the deal? 10:34 p.m. Monday, February 11th, and Aurora Cannabis released its earnings today. I had its earnings call, and right now Aurora Cannabis is at $7.05. It went down today 5.5%, and after hours it went down 1.6. So I'll show you what I did. I had 283 shares, but I now have 277. So I lost a few shares. Yeah, so I did a market sell 283 shares at $7.15. I was thinking that it was gonna go down further. It did not. So yeah, so I did put a limit buy at $7 for 289 shares. It did not reach $7 at that time, so I ended up doing a market buy at $7.32 of 250 shares. Then I did a market buy of 10 shares at $7.32. Then I did a market buy 15 shares at 7.29, and then I did a market buy of 2 shares at $7.30. So I lost some shares there. Again, I had 283. Now I have 277. So I lost 6 shares today. 2%. I lost basically 2% of what I had. Like I'm down 7.64% during the normal hours of trading, and ACB is down 5.5% during the normal hours of trading. So yeah, y'all get the idea what happened there. But I'm good because last week I started out with 269 shares and I brought it up to 283 last week. So I just lost a few shares today. Um, I wanted to read an article that has to do with the earnings. This is from New Cannabis Ventures. Aurora Cannabis net revenue grows 363% in second quarter. So, February 11th, 2019, Aurora Cannabis announced today its financial and operational results for the second quarter ended December 31st, 2018. Net revenue represents our total gross revenue exclusive of excise taxes levied by the Canada Revenue Agency on the sale of medical and recreational cannabis products effective October 17th, 2018. These terms and non-GAAP measures are defined or reconciled in Aurora's Q2 2019 MD&A. And these are the Q2 2019 and subsequent highlights. Net revenue of 54.2 million, up 83% sequentially and up 363% compared to the same period in 2018, driven by Aurora's strong performance in the launch of the Canadian consumer market with sales of 21.6 million, and the company's continued strength in the Canadian and international medical markets with sales of 26 million, up 8% in revenue and 23% in volume sold. Average selling prices were impacted by the introduction of excise taxes across all Canadian sales channels on October 17th, 2018, as well as lower wholesale pricing realized in the Canadian consumer market. Going forward, Aurora intends to continue prioritizing medical patients in Canada and globally, where margins continue to exceed those achieved on the wholesale consumer market. Q2 2019 kilograms produced and kilograms sold at 7,822 and 6,999 were up 57% and 162% respectively, driven by continued and significant scale up of Aurora's cultivation operations and strong demand across all the company's markets. Gross margin on cannabis sales of 54% was temporarily down from 70% in the prior quarter. The decrease was primarily due to a lower average selling price per gram of dried cannabis, the impact of excise taxes on medical cannabis net revenues, and temporarily lower proportion of cannabis oil sales in the company's sales mix ratio. Also impacting gross margin were increased packaging requirements under the Cannabis Act and one-time ramp-up and optimization costs as our Sky facility was brought up to full production. The company anticipates that the launch of a new derivative product lines, once allowed under Health Canada regulations, will contribute to improving margins. So yeah, that's one reason they went down. So I'll kind of go over it again. Gross margin on cannabis sales of 54% was temporarily down from 70% in the prior quarter. So the margin is like their margin, like the gap that the profit that they're making, the percentage wise, that gap went down. And they're saying that the decrease was primarily due to a lower average selling price per gram of dried cannabis. And they're saying it's because of the taxes. Basically, on the earnings call, I heard some of it. I didn't hear all of it. But on the earnings call, Cam Bailey was saying that Aurora absorbs those taxes. They didn't want the consumer to absorb those taxes. So the company itself is absorbing those taxes. That's what he said. So I'll continue. The company is performing well in the Canadian consumer market, recording 21.6 million of revenue in Q2 2019 based on available data released by Health Canada for the Q2 2019 period. Aurora accounted for approximately 20% of all consumer sales across the country, and that's very significant. So Aurora accounted for approximately 20% of all consumer sales across the country. From what I've heard, Canopy Growth is I think they account for 30% of the consumer sales across the country. From what I heard, that may be wrong, so I'll continue. Cash cost to produce per gram of dried cannabis sold temporarily increased from $1.45 in the previous quarter to $1.92 in Q2 2019. This change was primarily due to a ramp-up and optimization costs as the company scaled up Aurora Sky to full production. One-time additional costs incurred related to the launch of the Canadian consumer market as the company waited for its Sky sales license. Also contributed to the increase. And they received it on October 17, 2018. The Sky sales license. So I'll continue. Aurora Sky is now fully complete and commissioned and is expected to reach its full production capacity based on Health Canada approved planted rooms shortly. Recent harvests completed to date at the facility have exceeded targeted yields, reflecting that the facility's commissioning has been successful. All environmental and nutrition systems and operating protocols are dialed in, and technology components are functioning well. Q2 2019 CG&A remained steady compared to the prior quarter as the lower sales and marketing costs were offset by one-time public company and acquisition costs, as well as the absorption of a full quarter of SG&A costs from recently acquired companies, including MedRelief. Non-cash expenses, including the December 31st, 2018 market-to-market adjustments of approximately 190 million, primarily on the company's derivative investments, contributed significantly to a net loss of 240 million. So I'll kind of read that again because that's also very important. Non-cash expenses, including the December 31st, 2018 market-to-market adjustments of approximately 190 million, primarily on the company's derivative investments, contributed significantly to a net loss of 240 million. And I believe when they say derivative investments, I believe they're talking about the investments they made for their like concentrated, like they're concentrated like the basically THC that was that's been taken out of the cannabis plant, or CBD that's been taken out, from my understanding. So I would like sprays, THC sprays, and uh, THC pills, and the CBD as well. I'll continue. In January 2019, Aurora completed a US 345 million convertible note offering, with the proceeds earmarked predominantly to drive the company's continued high pace of growth in Canada and internationally. So yeah, there's a lot more to read. I'll read a little bit more. Outlook. The most significant driver of Aurora's revenue growth over the next 12 to 18 months is the company's scale up high quality production available for sale to the Canadian consumer market and the Canadian and international medical markets. Aurora is now operating at an annualized production rate of approximately 120,000 kilograms based on Health Canada approved planted rooms, and expects to reach in excess of 150,000 kilograms by March 31st, 2019. Management reiterates previous guidance that based on the company's current confirmed production results, Aurora will have approximately 25,000 kilograms available for sale in Q4, which is April to June 2019. The company anticipates that with Aurora Sky operating at full capacity, as well as continued reduction in operating costs, the cash cost to produce per gram will trend significantly lower. Management reiterates its expectation that the sustainable long-term operating cost at its Sky-class facilities will be well below $1 per gram. Ongoing disciplined cost management is expected to result in SG&A costs growing modestly as compared to revenue growth over the remainder of the fiscal year. Consequently, and consistent with previous guidance, management believes that the combination of substantial revenue growth, low cost of production, and disciplined operating cost management will position Aurora to achieve sustained positive EBITDA beginning in fiscal Q4 2019, calendar Q2 2019. Longer term, the company expects that the launch of a new higher value added derivative products lines in relation to anticipated changes in Health Canada regulations, as well as the introduction of derivative products to international markets, will contribute to further revenue growth and margin expansion. Yeah, again, when they say derivative, they are talking about their concentrates, from my understanding. So I'll just, I'll go scroll down. I'm not going to read all this because this video is already very long. Yeah, and they reported a pretty high debt, but that's because they're doing several. They did several acquisitions. I have a handful. So I just wanted to go over some of that. So yeah, now I'm actually 11.5 over all time. Past year I'm 20.9%. Past 3 months I'm down 6.7. Past month I am up 18%. Past week I am down 8.4. And today I'm down. During normal hours of trading I was down 7.6, and after hours down 1.6. And MJ ETF MG Alternative Harvest is down 2.4. CGC is down 6.9. Chronos is down 1.5. Afria is down 10.3. Hexo is down 5%. Tilray went down 4%. And yeah, that's it, y'all. If you're new, go ahead and hit that subscribe button. You won't be let down. Peace out.